Hi, welcome to the Dow Review for Monday, the 18th of August 2014. And as you can see, the Dow's just opened here, and the price is trading down towards the 16,750. That's the BRN, the big round number that we can see. We've also got support to the left. And just as I'm speaking, we've got a short and a long, but you can see how the market turned around and moved sharply to the upside there, cancelling the sell signal, leaving the buy signal in place. The entry price is by some resistance to the left, so in order to take this out, we need to see an increase in volume. So we've got a bit of weakness to the left here. We've also got the R1, which is the resistance one in the pivots, and the high from Friday as well, which needs to be taken out before we get to the scalp level there as well. So price is starting to move higher there. The volume's starting to build as well. So what I'm going to do is just to speed things up a little. So let me just drag the mouse along the tracking here so that you can see. Look at the volume. It's very important here. Just notice how the volume's increasing during this 5-minute bar. The market's undecided. There's obviously some absorption of selling going on at the moment, holding the prices at this level. And there you see the buying confirmed. We've also got a second potential buy signal. The second sell signal as well has also been cancelled because the market went straight through the stop price for this as well. So moving on, we can see again the volume building. Watch the volume. The market's undecided, and now you can see the market taking out the resistance to the left and also filling the two orders actually that we have, buy orders now, that are on the screen there. Weakness coming back in again, no surprise really. We just got to look to the left, and again the volume starting to build dramatically there during the 5 minutes. The market holding on the highs once more, which indicates that if the market isn't going down with this amount of volume when prices start to move lower, I'm just winding back and forward here so you can see, and then eventually the market moving higher, selling absorbed up to the R1 level. And again, keep your eye on the volume. This is what you should be watching when you're trading. It's fascinating. So now we see the market coming off the high. We've got some potential weakness there. There's some selling around in the market, and we've also got a sell signal. Again, what you should also note as well now is that we're just above the entry price, which is the resistance area to the left. In order to move higher, now we need to see the market drive again, and we see that now coming into the market. Just moving this back and forward again, and there you can see the sell signal taken out, and the market trading right up to the scalp. Well, again, look at the volume. This is what you want to see. You want to see an increase in volume when the market's driving through resistance areas to show that the professionals are fully aware of these resistance areas as well as you are. And in order to overcome these, you need to see an increase in volume. So there we're alerted that the scalp has been hit. And for some unknown reason, when you trade these markets for a considerable time, you get used to their personality, and when you see a market like the Dow, which is thinly traded compared to the S&P 500 and the Russell 2000, you learn the habits of it. And when the market breaks out like this in the Dow, plus if you'd have looked at the early morning session, the overnight session, the market had been moving up strongly as well, which is generally an indication the market's going to continue in that direction. So what you can do when the market trades through the 20-point scalp, first off, you could move the stop to break even. That's what you could do, so you're not exposed to any any loss and an unlimited risk, unless of course you get a situation like Friday when the market had the vague news about the Ukraine and Russia. That aside, on a day with no news, the market's likely to continue in the same direction. That's one of the great things about the Dow. Most of the time the market will trade in the one direction, which is what happened with the currencies at one point, but the personality of those markets seems to have changed at the moment. So the market's gone through, and then what I tend to do is move the stop to break even. That limits the risk. Alternatively as well, what you can do is take off half of the position and leave the other half fishing, just in case the market does move higher, so you've actually banked some profits as well. to take off half the position and move the stop to break even. So the market continues to move higher, and before I start trailing the stop, I want to see some sort of weakness coming into the market. I see some here, there's a bit of selling, but the volume's starting to drop off, and there's no surprise really that the market stopped here because we're at 16,700 now. So again, no surprise there. BRN, the market's finding some sort of resistance. In order to move higher, the market's got to drive through this area, and you will see it attempting to do that. Now see the volume increasing again. And this is important. So we've got some further weakness here in the market. So now I'm going to consider watching the market once more and then start to move a stop into the market 100% below this weakness. We get further weakness there. But what's important here is that after the weakness, the market doesn't follow on with increased volume. So I know that the selling isn't going to continue to the downside so much as it's just profit taking at these numbers. So now you see me adding in the 100% extension, which is just above the scalp. And something I should bring to your attention here as well is that when I replaced the PTP markup here, I actually placed it on the wrong bar. It should have been on the bar before because that was the one that had the original signal. It's out by about 2 points, so nothing major. But for those eagle-eyed observers out there, that's a mistake on my part. I actually placed it on the wrong one. However, the trailing stop is in the right place. I'm looking for rising lows and the market moving high. Again, you can see there an increase in volume. It's not green, but you can see that it's above average and the prices are finishing on the high as well. It's just outside the criteria that I use in order to automatically color the price bars. But if it looks like buying, then it is buying. So price is moving higher again. We've got some more potential weakness there. I'm moving the stop up again now, locking in the profits. And once more again, as we get these rising lows, you can see the stop being moved manually by me as I just periodically come in and have a look at the market, see what it's doing. Again, you can see the one I've added now is actually lower, so there's no point in moving the stop. Market starts to move again. It makes new rising lows. We have a new buy signal there as well to add to the position if necessary, but I wouldn't want to do that after 50 odd points. The market needs to have a breather, plus we're heading in towards the lunchtime session as well. Some selling coming into the market here at the bottom. I can see this because the volume's above the average line. And again, you can see we've got the sell signal from this. Price is remaining sideways to higher. That's cancelled because it didn't fill within the 3 bars following the signal rules that we use. And then we see a bit more potential weakness. I'm just letting the market breathe a bit more, seeing the buying coming into the market before I consider moving the stop. I could have just continued to trail up, but the market was fairly quiet. We're going into the quiet session, so I wasn't too concerned. Give it a chance to breathe and show its hand. And again, there you can see moving the stop. And then I'm going to move it up one more to the low of this bar. You can see the market making these rising lows. This way I'm just tucking in behind the market. We can see we're at 67 pips. The most we had on the trade there was around 76, I think, in total. And there you can see the selling coming back into the market now, some profit taking, and there you see the market taking out the trade. So around 62 points. It was actually a bit more because obviously I'm on the wrong price bar there for this trade. So the market then sideways. You can see the buying coming back in. We go through the afternoon session. Look at the volume. It's dropped off markedly there. And you can see the market there with a bit of selling coming into the market, finding support, moving sideways. And there we see some testing after the selling, and prices coming back down to retest that selling. I've just rescaled the chart there. You can see the buying coming back in, followed by selling. The market didn't know what to do as we got late on into the trading session. We're heading in towards the last hour, which is an hour that I don't like to trade because the market can be fairly quiet and also give the the wrong sort of signals. And here's a typical example of that. You've got a sell signal there. I've drawn in across from the lows over to the left, which is where the buying was. We've got a test here. The market's come through it. It all looks like it's going to work out just fine. It doesn't. The market fills the order, and now I'm moving over to the left to see where the support is. The market finds support around this level and then reverses and comes back. And the question is, why did the market come back? The market came back purely and simply because throughout the whole session the market had trended in one direction, and that was to the upside. So this is a quick view of what happened yesterday, and how once the market trades through the 20-point scalp, how you can adapt and use all sorts of ways of actually staying in the market. You can move the stop to break even if you wish and leave the full amount on, or you can move the stop to break even, take half off, so you've banked half, and then leave the other half of the bet actually fishing for higher prices, which we've seen in this example. And this is not uncommon, but they're not that frequent either. You probably get 3, 4, 5 of these a month, so they're great trades when they do happen. The same on the downside as well, which we haven't seen an awful lot of in the last few years, because obviously the market has gone in one direction as far as the Dow's concerned. But I'm sure we'll be getting plenty of those in the coming months, as the prospect of interest rates are looming that they should be rising. So it's there's a lot to play for in the Dow in the months ahead because of all sorts of issues. And there's a lot of forecasts as well that 17,000 the market should be pretty well exhausted. It is an asset bubble without a shadow of a doubt. So again, a lot to come, in my opinion, as far as the Dow over the currencies at the moment. Well, that's it for me for today. I will see you in the next edition. Thanks for watching, and long may the profits continue with the Dow.